All right, so I am here. I'm probably a little different than some of the stuff you guys have been looking at today because we are intraday traders. So we trade the markets actively. We trade all day, every day. Actually, we trade sort of on a timeline. There's different chunks of the day that different clients trade with us, right? Folks that we've trained over the years, mostly still trade with us. And, a lot of them focus on first hour trading. Some of them will focus on trading over the course of the day. A lot of what we do is sort of an intraday swing trade. And a lot of what we trade is up on the screen right now. So sort of the discretionary trading that we do is focused in large part on the Magnificent Seven. And if you're looking at these stocks and thinking, what's going to happen with them over the course of the year, we got a new administration coming in, obviously, and Trump's policies are going to be on the side of deregulation. There's going to be corporate tax cuts. That's all good stuff for tech companies. There's some potential challenges. There's going to be problems with China, obviously, I think, and the visas that a lot of the talent requires to come in and work for these companies. Those are possibly going to be in jeopardy, and or some of them are anyways. And that's all stuff that can just be a little bit of a headwind for some of these things. The good news is it's going to introduce lots of volatility into these trades, and you can see here, today, like on Tesla. Actually, in the first thing in the morning, we were expecting this to go short, and I think it was our first trade in Tesla this morning was down a dollar and a penny. And over the course of the rest of the day, we made the sort of the paradigm shift of where we thought it was going to go, and went and focused on the long side of the market, and things went well with all of these guys. But these are a big focus for us, and like I said, the good news volatility, that might be not so good news for people who are invested sort of longer term in these. We might see that the big uh, runs in these stocks where they were just so greatly outperforming the markets, that might be coming to a stop. And we might see the volatility sort of trim the gains that we see on these over the course of the next couple of years. The other thing we focus on quite a bit is biotech stocks. So the biotechs, those tend to be in our we have an institutional trade that we do, set it up running a hedge fund, and we've been trading it for 10 years. It goes through, it analyzes a bunch of stuff that goes on in biotech. And those stocks are, they tend to move. I mean, they really get going when we see these technical patterns on them set up. It's essentially an expansion of range and volume setup that then goes through and also tries to figure out if there's a big accumulation or distribution going on that on behalf of an institution. But those stocks, I think they're going to be interesting going forward because, again, you've got deregulation. It's just what I assume is going to happen, and what Trump has been saying he was going to do is deregulate a lot of industry and deregulate um, the biotech and the drug industry in particular, so that they can bring drugs to market quicker, so that you have faster FDA approvals. That's good. The other thing that he talks about quite frequently is imposing constraints on drug pricing, on going through and sort of redesigning the drug pricing model so that it's not such a burden on consumers. That's going to be, another one where that's going to be kind of a headwind for the biotech sector. So again, I think those two sectors, we're probably going to see some good volatility, right? The biotechs and the techs, we're going to see some good volatility. Going to see a situation where maybe the runs aren't going to take them up in terms of percentages the way that they have been, but I think there's going to be lots of good trading, especially intraday trading on those, and some of the intraday swing trading that we do. So when I say intraday swing trading, it's just, we run um, sort of some longer longer trades, things that are opened at the opening bell effectively and closed out at the end of the day. So we close everything at the end of the day. We're traders, we're not investors, and our money comes home. We bring all the ponies come home at night, and I don't like overnight risk. So I've got enough overnight risk in our real estate portfolio that is mostly Southern California real estate. That's where we invest. That's where we live. We're not there right now. We're in Ohio visiting family for the holidays, freezing to death here. But it is it's all about where you want to invest over time. So on the indices, I think the Qs, the NQ, if you guys are trading futures, we trade a lot of futures as well. So we'll do NQ trades that trigger from the QQQ. So we're always looking for levels. So you can see those lines on the screen there. Those are the levels that we were keying off of today. We were long the Qs. You can see that was a good trade as well. 518.29 has been a trigger line for us, and 518.83 is actually an exit signal for us. Now we trade those on the NQ. So we go through and we trade them on the NQ, get a lot more leverage that way, have to put up less capital in the futures account. But these are going to be pretty vulnerable to trade tensions. So I think that on the NASDAQ 100, you've got a lot of optimism because of growth focused policies. But again, you need to keep an eye on international trade news and see what the tweet environment is like as we're moving forward. So if a lot of things that have been said so far are intended just to influence trade policy with other countries, then I think we're going to see some positive movement on the triple Q and the NQ. And if it turns out to be a reality that a lot of things are there's going to be a lot of tariffs and a lot of again sort of headwinds for companies that are trying to work in a trade heavy or a supply chain heavy environment, then you're going to see the NAS probably stall out a little bit. And then, I think that on the S&P 500, on those futures, and on the S&P 500 index in general, you're going to have, there's financials, there's industrials, there's energy, and you're talking about a lot of deregulation and infrastructure spending that this administration is pitching and proposing. So I think that those could be areas that we actually see some growth. So the S&P closed out a pretty typical year last year, and I think if the policies that are put in place are as they've been proposed, then we could see some pretty good growth there. Okay, so if you guys there's questions on specific stocks, right? So that's sort of the idea today, and if you have some questions for me to answer, let me see. I need to pull up the chat here for a second. Hang on. Here we go. So if what the one thing that I would just say is if you got to type it in, like let's look at LDOS and just maybe type in, if you're looking at something from a traded intraday kind of a vantage point, or if you're looking at, sort of what's the longer term picture on the stock look like. So I trade from bar charts. I don't use candlesticks, so I hope everybody's familiar with bars. My wife, Julie, and I are a trading team. She loves candles. I think for me, it's just easier to look at stuff in bars. I always say do my best thinking in bars, right? This is LDOS. So this is the first one we have a question about. So in this case, let me pull up some drawing tools here so we can take a look at what's going on. Okay, so obviously we're down right on this big base here. And if you look out on the right side of the chart, this is a hierarchical cluster analysis of sort of volume by price data as it comes into the markets over time. So this is going to be the same on an intraday chart or on a daily chart like this one. But what you see is there's a big cluster of price that is going on, right? And let me get drawing tools up here too. Talk about this. You've got a big, cluster effectively out here. And, price likes to gravitate inside things like this. And I think that probably, the upper end on this is going to be, up in here, probably up to, 167.04. And if it gets down under here, the danger is, right, when you get into these voids, these are places that the impact of price in a cluster analysis has been insignificant. So it's going to be an easy fall if it gets down below 141.91. It should be anyways, an easy fall down into 139. And then after that, the next place would be 131.86. And you can see that's really borne out by some of the support and resistance back here. We can go and put a little bit more time on this chart. We can see even more of what's going on in the background. But that was a significant cluster again over here if you're looking at that side. And if it stays above this range and stays out of this void here, then you might see it come back down into 9.31 and then pop higher, just off this cluster over here. I don't know if you're looking at these at all intraday, if you guys are trading them, but this one's a really good LDOS is a real good intraday trader. So you can see there's lots of days that you're going to get some real geometric trading on this kind of a thing. So if you look at, what happened today, for instance, you've got the first move that it made, puts in a nice, trough to peak, trade sideways for a little while. And then if you go out and project the expansion, if you guys are like fib traders or, you're into the waves and all that stuff, then 145.61 was a no-brainer. From the setup that you had in the morning. So as the market started to pick up some steam, you had lots and lots of opportunities on this thing to project expansions and just always going trough to peak. Look at that. You can on LDOS, an entry, off that first break had projections all the way up into 147.45. So it's a good intraday stock to trade as well. And we've got Tempest. Again, on a daily, you've got something. I mean, if you're asking about it, I'm hoping you picked it up on this base down here. This again is a place that you see there's a lot of volume coming into the market at this particular price. If you're looking at this price threshold here, super important. These also skew. These aren't volume numbers in the same sense as these down here. So these aren't giving you absolute numbers. What these are showing you is how important is a threshold compared to other thresholds that the price has been at, in terms of driving the next move that a market's making. So, I mean, in this case, if you're looking at the stock and, you're trying to figure out, well, is this going to have legs? Is it going to be able to get up into the next range? I think this threshold level out here at 41.92, that would be, if I'm looking at it as an intraday trade or as a swing trade or something, I'd be looking at, well, that's probably the next place that it's got sort of easy travel range to get to. If it gets above there, right, then, you're getting back into a bunch of, overhead garbage, overhead resistance until you get up into about here. If it gets up into 49, then you could see another move back up into the top of the range. So it's a good industry to be in, a good sector to be in. Probably going to cool down a little bit comparatively to what it's been doing, but let's see where we wind up here. So I don't know what that's. So this one's a symbol I don't know, but if you want to type it in there again, and I'm not getting any price data for it. Riot, this one. So for us trading it from a daily chart, what we do is we go and trade these things as so this is a setup. If you read my books or which go way back, or if you follow our trades and you're looking at the style of trading that we're doing. So today is I call this a fastball. So this is an expansion of range, expansion of volume. It's going out strong, so it's coming into the end of the day here with a strong move going into the close. This tells you that if there's an institution behind this buying, the institution didn't get done today what it set out to get done. And especially if this pops going into the close, then definitely on Monday, we would be looking for a continuation opportunity. And then the way that we would set this up. So this is, not my favorite kind of overhead stuff to get into. It's kind of hard to figure out if this starts moving here. You can see there's been a lot of sort of back and forth in this range where the stock just has a hard time getting out of this particular area. So if you're in from, if you're lucky enough that you got in this morning, right, and you're in from, 10:58 or something, and this is a swing trade, then yay. If you're looking at this as what would you do on Monday with it, I would say, you've got an intraday trade there that's set up with like a $12.30 entry, a 12.75 target. And then the good thing about it is if it goes out the way that it's going out, you've got, pretty much anything below $12.15, $12.10, you would just pull the plug on it. At most, you would let this get, down into about $11.90. And then you would say, after that, the ease of motion is going to be back down into that range. But that's the only thing that would have us sort of avoiding this one is the price, because, $12 stock, we tend to trade things that are trading above $30 or $40 a share on up to, a few $100s a share, just because they've got the ability to really move. They really have the ability to go. But yeah, Riot's a good one. If you can load up the share size and trade it intraday, it's great. If you're gonna hold on to it, be prepared for a lot of volatility. This thing puts in a lot of those expansion of range and volume kind of days. RKLB. So this thing's had a really strong run, and I knew, but I don't remember the news that has been driving this. But if you look at it and you go out to, let's say, a weekly chart, or let's even do a monthly chart, you're at all-time highs. And if this again is an expansion of range, expansion of volume setup, it's going out strong into the close. If it gets above these highs here, then I think it's got room to keep going. And the way that I would, project this kind of a thing and try to figure out, where do I think it's going? I would grab this leg here, that trough to peak, and say, I think sort of the next logical place that it's going to go. If it can break above those highs and stay above those highs up to about, 32 and a quarter. You can tell we're sort of shorter term. So our focus is always on, what's going to happen pretty soon in our trading. So Alcoa, this is, again, this will be on our plan. So today it was a switch hitter setup, or also sort of an infield fly setup, and Alcoa is a short. So for us, if you're an investor, not what you want to hear, but for us, the trading plan today, $37.83. And then, you just had a target down here at 36.85. So you had a nice, dollar per share trade, and the thing keeps going. So unfortunately, if you had that trade bracketed up today, you took about half of what it did. If you were, trading it actively and sitting in front of it all day and watching what it was doing, there was a lot of opportunity there to move it out. I think this has relatively the ease of movement on this is you're going to see an inflection. So 35.19 is going to bounce. It's going to do something. You just don't know. Is it going to be a short-lived bounce, and is it going to track down through? If it does, then I think, probably, down into the low 30s is going to be, we just had an order fill here, but let's just ignore that. If you get down in 32 bucks, then, Alcoa is one of those stocks that can, it can go and really dip. Or if it gets, if we get some good news for the industrials, if we get some favorable policies, like I was saying earlier, then I think, Alcoa can bounce and, head back up into at least this 3960-ish overhead stuff, and then possibly move higher. So this one tends to gap a lot. You know, this is I'm looking at this chart, and this is really one of the reasons that, like I said, we don't keep our money in the markets overnight, because the stocks that I like as traders, tend to be sort of nerve-wracking holders. So when something gaps as much as Alcoa's gapping here, it can gap right past one of these support levels, and if it does, then you wind up down. You can get down into the ditch pretty quick. So Biogen, this is a fave in terms of trading it. This pops up on our XRV stuff quite a bit. You can see, it'll put in these sort of long bar moves and go out at the extremes, and then that sets it up for these nice intraday. Usually about $1 per share is how we bracket these up. It's moving higher, and if it gets up through 155.40, then you've got sort of this like stair step progression that you could see up into the trading range. But if you look back, let's go back on the chart here a ways. This has been a pretty persistent downtrend. So this is going from the beginning of 2024 just all the way right down the pipe to the end of 2024. And if you go back further, it's been super persistent. So, I mean, the trend on Biogen has been lower. I think it's a great intraday trade, because it trades like this. Again, it does this really geometric trading, and that's the key for profitability intraday. But at the same time, if you're invested in it, you're hoping it's going to catch a bounce off one of these bottoms, and it just hasn't been able to bounce much at all. Let me see here where we are. Yep, BKKT. So this is not a great intraday stock, just because of liquidity. But if you're looking at it on a daily chart and you're saying, well, where's it going to go? Right? If it gets down into 23.59, then it's got a real good shot at getting back up into 32.12. So that's a nice, if you guys are trading options or something, or you're setting up I would look at how these things are priced. Some stuff like, if you look at Tesla, the options market's betting on I think a $40-$45 move in either direction. So sometimes you could do spreads and strangles and straddles and all that kind of stuff to try to box something up. This guy, I think, as long as it stays in this sort of rectangle up here, you're probably going to see lots of volatility, lots of these wide range days, seeing $5-$6 a lot of times in up and down movement. So this, if you're setting it up as one of my like around the horn trades, it's great, right? Because you just put the trade on and you don't look at it again. You've got the program trading it in the background, and all is well. But if you're trying to trade it manually and follow along, these guys that don't have a lot of volume intraday can be tough. Coin, this is some volatile stuff. I know we've got a lot of traders who are doing well with with XRP and with Bitcoin and everything. And I think long term, this is a pretty safe bet that we're going to see it move back up into 300, 330 again. Short term, just beware the volatility. I would not, don't buy this thing in the middle of a range. You always want to buy it, if you're buying, you want to buy it when it's making a bottom. Getting back into one of these support levels. You can see them. I mean, they're really clear, right, where it's coming into an area that had significant support or resistance back here. Go back 6 months on a chart, and you can see these things are lining up exactly where it's inflecting today. So there's been a lot of algo trading with these things, a lot of program trades going off, and those things are, coin in particular is one it's pretty easy to peg going back on support and resistance as to where you can pick it up and make some money on the upside, and also short it, right, going back down again. Amgen, that's another fave for us in terms of a intraday trade. It's down below pretty significant support back here. So as long as it stays down there, I think it's gonna keep testing these lows. If it gets back above there, if you look at these clusters out here, it's gonna pop right back up. It's gonna pull. These are like gravity points. Those are the footprints of money, and that's where you're gonna see price go. Um, Hey, if you guys want to join us and watch what we're doing, if you're intraday traders or if you're interested in intraday trading, do this thing here. Just go to traderinsight.com/trade. Maybe Dave can pop that into or I can pop it in, I guess. Yeah, there we go. Um, and you can come in and just have a look around, even if you're not trading as for a living or you're not trading full time. Come in, just hit save my seat. You don't have to put a credit card or anything in it. It'll just let you into the room and you can watch what we're doing. Because I was talking about trading opening gaps and I was talking about trading, like the Magnificent Seven. We do that stuff all day, every day, and you can just look over our shoulder as we're trading them live. So they're not hyperactive, right? We're not a super active trading room. We've got, maybe 6 or 7 trades usually that are going off. You can see, that's everything we did today. So you're only really talking about we did 10 trades over the course of the session and managed to pull, 8.25 per share traded out of the market. And that's where our focus is. So we're really just focused on it's income trading. It's going out there and pushing the envelope a little bit, challenging yourself. You're trying to find a new place to generate some income, a new place to generate some something interesting, something to think about, a new thing to wrap your head around. But yeah, so hopefully we've got 2 minutes remaining. Anybody else have a question or? All right. Well, as I said, we've been traveling. We've been taking care of. We've been doing a little bit of elder care for the last month and a half or so, and trying to get over whatever this flu thing was that was going around ourselves. So we haven't been out there as much as we normally are, but you can catch us live. We've got a bunch of live stream stuff that we do, and pop into the room and see what we're doing as well. All right, David. I think